Hello everyone, myself Nazia Hasan. I am an assistant professor at Tirthankar Mahavir University, Muradabad. I welcome you all in today's session, which is based on a subject called Advanced Cost Accounting. Before going deeper into the concept of cost accounting, let us first understand the basic concepts which are related to cost accounting. And understanding of these concepts will help in the better understanding of a subject called advanced cost accounting. So the basic concepts which we will be covering in today's session are branches of accounting, meaning of cost, cost accounting and cost accountancy, objectives of cost accounting, differences between cost accounting and financial accounting, differences between cost accounting and management accounting, and elements of cost. So first start with the branches of accounting. Although we have many branches of accounting, but we are concerned over here with three main branches of accounting. First is financial accounting, cost accounting and management accounting. Financial accounting, we can say, is a initial phase of accounting. It is a specific branch of accounting which involves a process of recording, summarizing and reporting the financial transactions of an organization over a particular period of time. These transactions are summarized in the preparation of financial statements, including balance sheet, income statement, cash flow statement that records a company's performance over a specific period of time. Another level of accounting is cost accounting. Cost accounting starts where financial accounting ends. It is a more advanced level of accounting. Cost accounting is the reporting and analysis of company's cost structure. Anything related to manufacturing, any product, process, information, transaction which is related to manufacturing of a product is said to be a part of a cost accounting. It involves assigning cost to a particular object, analyzing expenditures, analyzing selling price, and thereby analyzing overall profitability of the organization. After cost accounting is over, then starts the management accounting. Management accounting is an accounting which helps the management. It is basically helpful for the people working in the higher level of the organization. And one simple definition of management accounting is the provision of financial and non-financial information to the organization for the purpose of decision making. Management accounting helps the directors, strategists of the organization to make the decisions. So we can say these three types of branches of accounting are interrelated to each other but have a very different purpose to serve the organization. Now comes to the basic concepts of cost accounting. Cost accounting in itself, the word carries a very different definition. If we bifurcate the information, first we should understand what actually the meaning of a word cost. Cost is the amount of resource given up in exchange for goods and services. We can say cost is the amount which has been given up by the organization in order to manufacture a product or deliver a particular kind of a service. Cost in terms refers to the monetary value of expenditure for raw materials, equipments, supplies, services, labor products, etc. It is an amount that is recorded as an expense in bookkeeping of an organization. Now comes the terms costing. Costing is nothing but it is just a process or technique of ascertaining cost. And good costing system carries a very great value for the organization. Costing is any system for assigning cost to an elements of business. Costing is typically used to develop cost for customers, distribution channels, employees, geographic regions, products, product lines, process, subsidiaries and entire companies. So it is very much necessary that companies should develop a very good costing system in order to achieve the goals of an organization. Next comes term cost accounting. Cost accounting definition as given by Chartered Institutes of Management Accountants, London, CIMA, defines cost accounting as the establishment of budgets, standard cost and actual cost of operations, processes, activities of products, and the analysis of variances, profitability, or the social use of funds. Cost accounting is the reporting and analysis of companies' cost structure. Cost accounting involves assigning cost to cost objects that can include companies' products, services, and any business activities. Next term is cost accountancy. Cost accountancy is the practice of costing and cost accounting. Cost accountancy is a wider concept. It involves the application of cost, costing, and cost accounting principles in the order to make the decisions for the organization. So I think the difference between these terms is clear to you. Let's move on to the next slide. Objectives of cost accounting. Objectives of cost accounting are presented over here under 5 main headlines: ascertainment of cost, determination of selling price and profitability, cost control, cost reduction, assisting management in decision making. Let us discuss these objectives one by one. First is ascertainment of cost. Cost ascertainment is just nothing but assigning cost to a particular cost unit or a cost object. The main objective of cost accounting is accumulation and ascertainment of cost. Costs are accumulated, assigned, and ascertained for each cost object. This cost object can be a unit, it can be a job, it can be an operation, it can be a process, department, or a service. Next objective of a cost accounting is determination of selling price and profitability. Determination of a selling price is a very important aspect for any organization, because selling price is the ultimate thing which develops revenue for the organization, and cost objectives serve that purpose. The cost accounting system helps in determination of selling price and thus the profitability of a cost object. Though in a competitive business environment, selling prices are basically determined by the external factors relevant to the organization, but cost accounting being a very good system, it provides a base for the fixation of certain selling price and although negotiation of rates also. Next is cost control. Maintaining discipline in expenditure is one of the main objectives of a good costing system. It ensures that expenditures are in line with the predetermined set standard, and any variation from these set standard is noted and reported on a continuous basis. So, cost control is done on the basis of 4 parameters, that is determination of predetermined standard, measurement of actual performance, comparison and analysis of variance and action. Now, determination of set standards and results. Standard cost or performance targets for a cost object or a cost center are set before initiation of a product or service activity. These are desired cost or result that need to be achieved. Measurement of actual performance, actual cost or result of the cost object or cost center is measured. Performance should be measured in the same manner in which the targets are set. That is, if the targets are set up operation wise, and then the actual cost should also be collected and measured operation wise to have a common basis of comparison. Then comparing the actual performance with the standard performance, and finally analyzing the variances which have been arises and action to be taken. I again explain this 5 steps in very simple terms. Suppose determination of a predetermined standard. Suppose the company has set a price of rupees 1000 for a raw material. This is a predetermined standard. After comparison, after analyzing the actual cost, it comes to the notice of an organization. The standard cost for raw material was rupees 1000, but the actual cost came out to be rupees 1500. There is a variance of rupees 500. Now it is the duty of an organization to analyze these variances of rupees 500 and compare and analyze where the carelessness or any kind of loophole has arisen. Why the cost of rupees 500 is in excess of the standard set of rupees 1000. Next is cost reduction. Cost reduction, it may be defined as the achievement of real and permanent reduction in the cost units of goods manufactured or services, rendered without impairing their suitability for the use intended in the quality of a product. Cost reduction is basically how much we can reduce the cost of a product so that quality of the product is not compromised. It simply means minimum wastage of resources and maximum utilization of resources. Comes the 5th objective, which is assisting management in decision making. Cost and management accounting, by providing relevant information, assist management in planning, implementing, measuring, controlling and evaluating of various activities. A robust cost accounting system provides internal and external information to the industry which will be relevant for the decision making. So these were the 5 objectives on which cost accounting system is based and developed. Another topic which creates most of the confusion in the minds of the students is what is the basic difference between cost accounting and financial accounting. I hope after going through this session, there will be more clarity in the minds of the students that what is the difference between cost accounting and financial accounting. So we will be studying this difference one by one. On the basis of objective, first difference is it provides information about financial performance of an entity. When it comes to financial accounting, it provides the information about the financial performance of an entity. But when it comes to cost accounting, it provides information related to the cost of the organization, whether it is ascertainment of cost for the purpose of control and decision making, or any information related to expenditure of an organization. Next is recording of data. Financial accounting basically records historical data. Now, what is historical data? Historical data in a broad context is data collected about past events and circumstances pertaining to a particular subject. By definition, historical data includes most data generated either manually or automatically within an enterprise. But cost accounting make use of both historical and predetermined data. Historical data we have already discussed. Now what is predetermined cost? Predetermined costs are the costs that have been estimated before they are incurred. They are also known as estimated cost or standard costs. Next is users. Users of cost accounting are shareholders, financial analysts and other stakeholders. And users of cost accounting are generally the internal management of the organization. Next is analysis of profit. In financial accounting, overall profit position of an organization is analyzed. It doesn't differentiate between whether it is a cost information or any other information. We analyze the overall profit position and financial position of an organization with the help of different financial statements. But in case of cost accounting, it provides the cost details of each cost object, that is product, process, operation, etc. Time period. Financial statements are usually prepared once in a year and cost statements are prepared as and when required. Presentation of information. There are set formats which have been specified in the Companies Act 2013 for the preparation of financial statements. The format of balance sheet is prepared as per the Companies Act 2013, which includes section for equity and liabilities and assets. Additionally, there are notes for detailed explanations and disclosures. But in case of cost accounting, there are no general set format followed for the presenting cost information. Tools for another difference is regarding the tools. Tools for balance sheet are income statement, cash flow statement, and which records company's performance over a period of time. But cost accounting, standard costing, variance analysis, and marginal costing are the basic tools of cost accounting. Now another concept which creates most confusion in the minds of a student is cost accounting and management accounting difference. So I think after this session it will be very much clear to the students that what exactly a thin line of differentiation between cost accounting and management accounting. First difference is cost accounting records the quantitative aspect only. Cost accounting records only those takes into account only those transactions which are related to money. But in case of management accounting, both qualitative and quantitative aspects are recorded. Management accounting does not restrict itself to the quantitative information for decision making. It takes into account both qualitative as well as quantitative aspect for the purpose of decision making. Objective. It records the cost of producing a product and providing a service. But in case of management accounting, it provides information to management for planning and coordination. Area. Cost accounting deals with anything, but it has to be related with cost. It only deals with cost ascertainment. But in case of management accounting, it has a very wide scope. For the purpose of decision making, it can include financial accounting, budgeting, taxation, planning, statistics, research, anything which is relevant to the decision making is taken in the scope of a management accounting. Relationship among cost accounting, financial accounting, and management accounting. As you can see from the diagrams, these three, financial accounting, management accounting, cost accounting, are interrelated to each other. They hold a very strong relationship because financial accounting, they serves as a base for cost accounting, and these both books serves as a base to management accounting for the purpose of decision making. So cost accounting is a branch of accounting which has been developed because of the limitations of financial accounting from the point of view of management control and internal reporting. Financial accounting performs admirably the function of portraying a true and fair overall picture of the results or activities carried on by an enterprise during a period and its financial position at the end of the year. Also, on the basis of financial accounting, effective control can be exercised on the property and assets of the enterprise to ensure that they are not misused or misappropriated. So we can say that financial accounting helps to assess the overall progress of a concern, its strength and weaknesses by providing the figures relating to several previous years. Data provided by cost and financial accounting is further used by the management of all the processes associated for the efficient acquisition and deployment of short, medium and long-term financial resources. So we can say these three aspects are interrelated to each other but have a very specific line of differentiation between all of them. Next topic is elements of cost. To understand the concept of cost accounting or the further preparation of cost sheet or any other statement relating to cost accounting, it is extremely necessary to understand what are the elements of a cost. Elements of cost are those elements which constitute the cost of a product, or anything which is present in a product constitutes the elements of a cost. For example, we say chair. For making a chair or for manufacturing a chair, what are the elements involved in it? We can say material, labor and other expenses. Material, you can say plastic or wood or iron rods. Labor, the person who has made it, and other expenses which are related to the manufacturing of a product which do not fall in the category of material or labor compose the elements of cost for manufacturing a particular chair. Let's study one by one. First is material cost. We will study the elements of the cost on the basis of three aspects: material, labor and expenses. Material cost we will study on the basis of direct material cost and indirect material cost. Labor cost we will study on the basis of direct labor cost and indirect labor cost. Then there are expenses which can be direct expenses or indirect expenses. Now first is direct material cost. With direct materials, you can clearly link these resources to the finished product. The cost of direct material is easily quantifiable, allowing you to easily and accurately allow them to individual products and their production cost. What is direct material? Material refers to the basic substance used in the production of good. Direct material are those material that are directly contribute to the production of a product and are easily identifiable in a finished product. For example, clothes and shirts, paper and books, woods and furniture, gold material in jewelry. You can easily identify them. They are called as indirect material. And what are indirect material? Indirect materials differ from direct material because they can't be traced back to the products they produce, and even though they are a part of overall manufacturing process. Indirect materials are overall small and bought in small quantities. Indirect materials are ancillary to the production of a finished product and cannot be conveniently assigned to a specific unit of output. For example, printing ink used in stationery, scissor used in cutting clothes for shirts, nail used in shoes or furniture. If you use nails in manufacturing shoes or furniture, but you cannot identify how much nails have been specified to a particular unit of a product, that's why they are called indirect material, and you cannot easily identify in a particular product. For example, in a printing press, you cannot easily identify how much ink has been used, but you can easily count the number of papers. Similarly, in a chair, you cannot easily identify how much nails have been used, but you can easily identify the wood in a chair. Next comes the labor. The cost of remuneration for an employee's efforts and skills applied directly to a product or a service. What is a labor? Labor refers to the human effort required to convert materials into finished products and is categorized into direct and indirect material labor based on the nature of work and its traceability to a specific product. Labor is a person who is actively involved in converting the raw material into finished product, and that particular labor cost has been differentiated on the basis of direct labor cost and indirect labor cost. Direct labor cost includes workers who take an active part and direct part in the production process, whose efforts can be directly correlated to specific activities or products. Examples like workers operating machinery, assemblers in a manufacturing line, carpenters in manufacturing furniture. You can easily say which particular carpenter has actually made that particular chair. That's why carpenter is a direct labor. Direct labor costs are directly associated with specific products or services and form a significant part of a total cost of the production. Next comes the indirect labor. Indirect labor expenses are those that cannot be directly linked to the cost units. Indirect labor involves employees who do not directly participate in the production process and their cost cannot be identified with individual cost centers. Examples include salaries of foremen, wages of maintenance staff, salary of administrative personnel. For example, a gatekeeper standing at the gate of an organization or a manufacturing unit is not directly involved in manufacturing a product, but his role in manufacturing of a product cannot be ignored. So we can see he is an indirect labor. Indirect labor costs are part of overheads as they support the production process but are not directly traceable to a specific product. Next comes the expenses. Expenses are costs in the production process that cannot be classified either as labor or as a material. Those expenses form the part of expenses in the heading of elements of cost. Expenses are also divided on the basis of direct and indirect expenses. Direct expenses, these are also called chargeable expenses. These are the expenses that can be directly, conveniently and wholly allocated to a specific cost center or cost unit. These are sometimes described as chargeable expenses and can include costs of hiring a special equipment for a job, expenses directly related to a specific project. For example, import duty, octroi duty, these are all part of direct expenses. Next come the indirect expenses. Indirect expenses, they cannot be traced to a specific product, they support the business as a whole. Indirect expenses encompasses all other expenses which cannot be classified as direct. These expenses support the overall operation and include utility cost, depreciation and administrative expenses. They form the part of indirect expenses.